Adrian, thanks for joining the show. Welcome to Stable Dash Live. How's it going?
What's going on, man?
Hey, how are you guys? It's
We're pumped.
270 million. Not quite 300, but we will get there. I was
270 million. Okay, thank you. I was going to say, there's a lot of numbers going in, but I think end of August, it's probably safe to say you'll probably blow past that with the way things have been going. Thanks for coming on the show. I'm sure it's been a not only busy past year, but especially busy past month. So kind of bring us into the moment. What have you been focusing on? What's the past month been on? Maybe after that, we'll dive into some of your background. I see you have a really unique chapter that we could touch on briefly. But yeah, tell us what's the last month been like at Steakhouse?
Every month seems to be very hectic at Steakhouse. I'm very grateful for this. I feel like if we're not, spinning plates, if we're not spinning 50 plates, we're losing. So it's good to stay active. We had a bunch of high-profile launches. The Coinbase High Yield Vault was a big one. That one's also in the 270 million range. MetaMask announced an Earn integration that we are also curating. And obviously the Robinhood one, which a lot of people have been talking about because it's a major, step into DeFi for an established finance player. So, yeah.
How would you describe... This morning, right before the show, so when I pay myself through the business, just a little fun fact here, I think I actually just deployed some USDC with the Steakhouse financial integration with Coinbase just like a couple hours ago. So what I'm doing is like I'm paying myself to my Coinbase wallet and then waiting for tax time. And so all of the tax kind of bucket is being lent on with stablecoins. And I think I deployed, it looked like there was like an existing integration with Coinbase. Steakhouse just got in. I think it's like 6 or 7%. So I personally just deployed this. Talk a little bit about this relationship, and then also like how we should be thinking about where Steakhouse plays.
I was even going to say how, we hear the name Steakhouse, but when you hear curator, I think some people like have a very foggy idea of like, what does it actually mean to be a curator?
Yeah. Yeah. I mean, I'm obviously very happy to hear that. So, thank you for for using the vault, and thank you for trusting us. I think it's like this is a great integration because we often make reference to it as a sort of best in class way that a traditional finance company can really build products on DeFi rails if you want. Because it's not just the vault, like you see the vault as a lender, but if you were a borrower on the other side, so to every repo market, there are risk seekers and there are safety seekers. And you're taking the safety seeker side, you're lending your capital because you don't need it at the moment. You have an opportunity cost and you want it to earn something. On the other side of the equation,
I stopped sharing. Back in, I was messing around with sharing this screen. It is funny, Zach, I didn't even put the two and two together having Adrian on today when I was doing this. But yeah, literally right before the show, I was making some moves on Coinbase and was interacting exactly with this user experience here where you can lend stablecoins directly within the Coinbase app. It looks like this is a specific benefit to Coinbase One members, which I am. We're going to try to bring back Adrian here. Let's get him live and try again.
That's why you can't hear me. I'm muted. I was just saying the same thing. I have this tax pool and it's like, it's not earning anything on SoFi. I was like, I should probably either do this or open up something in Robinhood and get some extra yield here.
Adrian, can you hear us? I'm not seeing his feed coming in through my side. Yeah, we'll let him refresh one more time. Yeah, the idea of curation is really interesting because you have like, it's funny the theme of these shows, how they just kind of organically all fit together. Sometimes like you have these really interesting things happening at the application layer where you have companies like Western Union, very different approach. BitGet Wallet, very different approach. Exchanges like Coinbase, where there's actually a relationship being created, trust being formed. And then you have the curation layer that's coming in under the hood that is, really providing this sense of earning, which is a very, very important component to, I think, a lot of these applications as they look to provide future incentive to stick around. I think how Malcolm even said it, like it's not something that they're rolling out right in the beginning, but as they think about their product roadmap and maturing it and growing it, the idea of introducing earning products and like keep your money here, keep your wealth here. And then by doing so, if you stick around, like you can earn. It's a really compelling offer. And
what's the differences between these two? And I would love to ask Adrian this, like the curation for a core vault and a high yield vault, and really like what are the differences under the hood? I think for me too, I'd want to talk to him a little bit about is Morpho Midnight and fixed rate yield here. Because I think one of the worst experiences when using apps like this is when one day you're like, wow, the yield's 7-8%. This is awesome. And then you go check it next week and it's back at 3%. And you're like, okay, especially as a novice user, it's like, what is that? Like that doesn't happen in your normal bank account app. You may get an email or notification once a year that, hey, your rate's changing. It's going from 3.5% to 3.25%, but like to see these massive swings, it could feel very, very unsettling.
Yeah, no pun intended. So the key case studies that we're going to be diving into once we get Adrian back on the stream, Coinbase is a big one. The relationship between Steakhouse and Morpho, I think for me is where my confusion starts to surface a little, like the difference between if we could plot the differences between Steakhouse, Coinbase, and Morpho and the kind of relationship that they all play together. I think that's going to be a really interesting thing to uncover.
Yeah. Well, I think one of the
she was essentially talking. It's funny how my brain goes to orange. It's exactly what she wanted.
There you go.
Talking about the brand. Shout out to Kashi. This seems like exactly what she's looking for as well. Just like thinking through, maybe they're talking with them, but the yield side of her business, she kind of acknowledged like, hey, I'll pull up Kashi here as we talk about it, but she was like,
it looks like Adrian's almost ready, so just keep that in mind. No deep thoughts, no long rant.
So you have a company like Kashi, and a ton of them are coming to market, these really beautiful front end banking products, and part of the huge incentive is cashback earning, and the idea of having a specialization in curation, earning, deploying products like this, it you could argue that it really deserves its own layer and its own focus. So,
yeah. All right, Adrian's back. Let's run it.
All right, bring in Adrian back. Adrian,
we're good.
I think so. I hope so. Third time lucky. Yeah, I changed computers. Should be okay now. I don't know how you guys do. Okay. If it's good, like you guys must have the lowest stress tolerance for doing a live show. I don't know how people do this.
You know what? It used to be way more stressful. I think the whole thing, like you're saying, you have all these plates in the air. You do that, like you said, 50 plates in the air. When you're first getting that up, and something falls, it feels like the end of the world. But as you realize, like, hey, some plates are falling and we're still here, and like, everything's still, it's fine. It's just the way it is.
We've only fried a few Mac Minis doing the live show. We were actually talking about, and maybe this is a great segue into what we were talking about with some of these products. How should people think about a Coinbase and Robinhood, a Morpho, and then a Steakhouse? Because I think we see these, we know that you all work together, to form and bring these products to market, but really who does what is being powered by Morpho, curated by Steakhouse in, Coinbase or Robinhood actually mean?
Yeah. Maybe the good place to start is the user. Like Coinbase is another good case study and another good place to start because people by default have stablecoins. So their main money in Coinbase is already a stablecoin. And what Morpho and together with Morpho and Coinbase, what we've been able to do is create a product that will allow people to earn a yield on those stablecoins. But by operating on a blockchain, you have to the conditions in our view that need to apply are that the the vault or the product needs to be fully non-custodial, and it needs to be fully disintermediated in order to be valuable. The alternative for any one of these users on Coinbase is to go off Coinbase into a brokerage account, or buy stocks on Coinbase or what have you. So in order to be a really compelling product, it has to meet certain criteria. Most important among those criteria are it needs to be transparent, needs to be non-custodial, and it needs to not be intermediated in the way that a traditional financial product might be. What Morpho does well is be the software that runs this. So it's smart contract software. It's a so-called protocol, and it sets the rules with which people interact through it, and it enforces those rules deterministically. So what that means is that if the smart contract works well, there is no leakage of value. It does exactly what it says it will do in a fully deterministic way. And Steakhouse's role in this instance is building a product on top of that software that plugs into Coinbase, but that retains the features that I was describing earlier. So, we're not taking custody. We're not, making discretionary decisions about, stock A, stock B, etc. The other benefit of using Morpho is it's a very focused product. We like this focus because we think it's a very important one. Morpho focuses very strongly on repo markets, what we call repo markets, or borrow lend. It's a foundation of the traditional finance system, and it's, we believe, I think, a necessary component to have a very, very big and very liquid repo market for on-chain GDP to be meaningful in the future. And what this means is that what the vault is technically allocating into are not assets in themselves, but borrow positions, if you want. And the role of the curator is to determine what collateral is accepted for borrowers to take loans against, and how to reallocate that liquidity in the most efficient manner so that the market works and clears as efficiently as possible.
How has those assets been evolving? We've obviously, this all started with stablecoins. We've seen the launch of Morpho vaults with the Mexican peso. Obviously, Bitcoin. We're seeing the rise of other tokenized equities. How is that maybe changing the way that you're looking at the way these vaults are structured? And then I think another interesting layer is now we have Morpho Midnight going from this route where, we say we have these variable rates. I was telling Drew when you were off screen, it sucks sometimes when you've been in a high yield vault that's at 10% and it feels like all of a sudden overnight it drops to 5%. I would love to let's just call it even at 7.5 and give me that for a year. So how do all these start to intermingle and work together? And how do you approach this as a curator? Say, like, what products, what vaults do we need to go out and build?
Yeah. I mean, for now, obviously, it's still DeFi in general is very primed to think in variable term rates. So Morpho Midnight is an experiment. People have tried fixed rates in the past. We think that this time it will work. But at a baseline, it will have to change the behavior of DeFi users to expect fixed rates. The reason people think in variable rate terms is because DeFi moves extremely quickly. When you have some atomicity and when you have composability, these are two very, very strong value propositions for operating on chain, because they mean that you can combine products that previously would have been very expensive or difficult to combine, and you can do it very quickly. The effect of that is that repo markets are by default variable, and people expect single block liquidity for almost everything. And in fact, a lot of the times, when people don't pay attention to asset liability management, then things go wrong very quickly in DeFi, precisely because it is so quick. And so fixed rates is an evolution of this, a welcome evolution in our view, that tries to put in a term structure to borrow to loans in DeFi. So instead of saying, I'm going to lend to you at 12-second increments, block by block, I'm going to be okay with my liquidity being locked up for a month or 3 months. And in return, I will accept a fixed rate for that period through essentially issuing what's functionally like a zero coupon bond. So you're buying, $100 in 3 months for less, something like this.
The use case that Zach and I at least really resonated with, Zach was pinging me on the side as I shared my tax earning bucket strategy, is the idea of saying, because in my mind, when I'm doing this, I'm saying, I know I'm going to need to probably, pay tax eventually, but I have this really interesting window that exists until that point where those funds are owed. And in that window, I can earn. But for me, the feeling I subconsciously had as a user using this Coinbase product this morning was, when it's time to pay, am I going to be able to take these out in that moment, so that April 15th or whatever it is for you, I'm going to have liquidity and access? One, where does the complexity live there? And are there products or customizable ways to say, I want this loan, I'm going to hold it until April 15th on tax day. At that time, I'm indicating that I will plan to remove this. What do you think about that? Am I thinking too far ahead, or is that possible right now?
No. So that's definitely possible with Morpho Midnight. That will be possible with Morpho Midnight. You will be able to configure your term if you want. We're very interested to see how, so similar to how treasury auctions also happen in blocks of time, and they tend to concentrate liquidity around certain dates. And so in theory, when the treasury auction has run and you can trade them, in theory, you can buy them at any point, but they tend to have more liquidity at certain dates. And we expect there to be a similar concentration of liquidity around some random convention. Could be the 1st of the month, the last of the month, 15th of the month, whatever, that just people silently agree with each other to say, instead of trying to make a market every single day of the week all the time, let's just wait until the 15th, do it then, and everybody does it then, so there's the most amount of liquidity, and then we roll it for a month. So you'll have to take into account these emergent market structures that appear from the interaction of users on chain. For the variable rate stuff, our view, our theory of risk in variable rate markets is that it's mostly around liquidity. So if you take something like a Bitcoin backed loan, CBBTC to USDC, this is a very, very deep market. There's a lot of people that are willing to borrow, and there's a lot of people that are willing to lend, and there's a lot of people that want to liquidate, which de facto means it's, even though 90% in theory, 90% at equilibrium of the CBBTC USDC market is borrowed at any given time, it's so large that vaults are a subset of that. And even if even if you had a significant position and you were trying to withdraw it, the effect of liquidating positions would mean that you would very quickly recover the liquidity within that market. That's just because BTC is a very big asset on chain. If you take a much smaller asset, something like Athena, we would categorize this more as high yield. Principally, there's obviously credit risk and market risk and so forth, but one of the big drivers is this market is just smaller than the Bitcoin one. And so there may be instances in periods of high stress where if you are lending into a high yield vault, you may find it difficult to withdraw because other people have withdrawn before you. And so you may have to wait for the market to rebalance, which may take an hour or 2 or 8.
Interesting.
Yeah. But in return, you get the benefit of, slightly higher rates, or what you would expect to be slightly higher rates.
Selfish question for our amazing friends over at Agora, as I'm looking at the term option here. What is unique from Steakhouse's perspective in a stablecoin like AUSD? What is so great about working with Agora in this maybe term unlevered direct exposure? How do you as a curator think about what Agora is building versus some of these other things?
We're stablecoin maximalists. So we love the Agora product and we love all stablecoins. And in our view, there should be as many as possible because it's the interaction between them that creates an interesting market. It would be very sad if we had one stablecoin for everybody. There would be far less trading activity, and that would be sad. It would be worse economically for market players. Agora is interesting because it has sorry, go on.
It's very Ben Milne of you. And you and Ben Milne need to grab a drink or something and enjoy stablecoins are for everybody.
I was going to say, when you talk about okay, great, these markets are formed and now we have these yield opportunities. What is your vision for, the financial markets in 10, 15, 20 years? Are there vaults and bank accounts? Are vaults completely isolated from bank accounts. I think you had an interesting part in like a CoinDesk interview where you were talking about that your daughter may never need to open a bank account into her life. So like help paint that picture for us. You know, do you want vaults to completely replace savings? Is this, they have their specific use case? What's your vision for the world?
Yeah, that's the context of this was, something similar. Like Oliver Acuna was asking me like what the journey or like what the, trajectory was, and thinking about it. So the relevant context was I was born in 1989, which means I remember the before times, before the internet. And so I remember like going out and playing this with sticks in the garden and stuff. But for people that were born after, the internet is a part of their daily life. And, going onto Roblox and hanging out with their mates, that's just life for them in a way that I can't actually intuitively understand because I didn't have that experience. So kids that are being born today are going to have a digitally native expectation for how money works. And in our view, stablecoins are just the digital format for money, full stop. They're, faster, cheaper, transparent, like every reason you could think of that just makes them a superior way of exchanging money and using it. So I expect that in the future, if, my daughter wants to buy a candy or a movie ticket or what have you, her expectation will be like, okay, do I open my can I use my Roblox wallet, or can I use my whatever wallet? And, what stablecoins do I have? What tokens do I have? And
that would be that would be a very interesting study, especially with like this Gen Z and younger population. Like, how much money do you actually hold in the Fortnite, the Roblox? Again, I think we even interviewed Drew. Do you remember Playtron? They're doing the digital dollars for gaming, and it's like, what are these things that are holding value? Alvin had this statement from BitGet Wallet previously of just, you want to be able to trade where you bank or bank where you trade, and you want to have, when your funds are somewhere, you just want access to them. You don't want to have to move them and switch them around.
Think of
trust. Trust is huge.
Yeah. The user trusts each of these places separately for different reasons, and they hold different balances of value across these different platforms. Today, those are largely incompatible, and they don't speak to each other. And these are siloed. So Roblox dollars or iTunes, an iTunes dollar is a private money-like liability issued by Apple Inc. that nobody wants to call a stablecoin, but is de facto behaves like a stablecoin. It's just one that you can't transfer, you can't use, you can't see, you can't. The obvious thing in our view is that eventually, it's not that Apple may one day use stablecoins in iTunes. It's just that if one day you will want to transfer dollars from iTunes to Roblox, a stablecoin seems like the easiest, cheapest, and fastest way to do that in the back end. So it will have a user facing function and it will have a back end facing function. What that mix is, I don't really have a clear view, but our view is that clearly stablecoins are the digital underpinning of how money will move in the future.
Zach, last question from my side at least. Yeah. So Adrian, when we, I'm looking at the website, products for the stablecoin economy. It's really great to meet you, because I feel like we have so many incredible conversations on this show with builders who are probably also looking at this website, and they're building applications. You were about to meet an awesome builder, Axel Ash Ahmed from that, building a application layer product. Who are you ultimately most excited when looking at, like, if I were to say, hey, we have 5 awesome introductions to make to Steakhouse, what are these types of builders that you want to be engaging you guys most and working with most? I know you said a lot of plates in the air. Is it more of these like Robinhoods, Coinbases, more of the kind of trading use cases? Speak a little bit about what you're seeing.
Yeah, I think obviously, selfishly, commercially, we would obviously look for fintechs, neobanks, that sort of thing, just because narrowly they are typically the ones that are the most crypto adjacent and looking to build stablecoin based products, but more from like a general interest perspective, hat on, who would you have dinner with in the world? I think, the chairman of the Federal, I would have a very good conversation with Christine Lagarde and with the chairman of the Federal Reserve about stablecoins, because I think that they would have very different opinions, and I would have an argument with at least one of them. And then telcos in Asia, Pacific, and Africa, I think would be the next one, as sort of digital frontiers where there isn't necessarily such a well-developed financial transfer ecosystem, where stablecoins are making headway, and where I think it could be ironically, the most mature market to develop these types of stablecoin products for. Because
did you happen to see the news from SphereNet? We were reporting on this at the top of the show, the telecom company Deutsche Telekom. I can pull up this news, but it's interesting because this is the first big use case, not in those two markets, but it looks like mostly in Latin America is where at least this. Did you see that news? Why does a company like this really want to get involved here? What's unique about them?
I think for telcos, it's a type of information transmission that interacts with money, and stablecoins seem like an obvious way of facilitating at a minimum, the clearing underneath all of the money exchanges that happen at the telecom level. M-Pesa is obviously a very relevant example, but there are other examples of stablecoin to mobile minute conversions in Africa, for example, that facilitate remittance payments or, saving solutions for people in local currencies that want to evade or exit those and hold dollars. It seems like one of those technologies that has very strong capillarity with users. It's very cheap to get to a very wide range of last mile users, and stablecoins are sort of perfect for that type of an environment. In particular, when the customer acquisition costs are lowered for bringing new users on, because with one tower you can cover thousands of people.
Yeah, Adrian, question. So you mentioned that we're actually the next few weeks with Movement, we're doing a Move Me session where it's going to be healthy debates for the industry. You mentioned that you would want to have some of these conversations with regulators and have a very passionate conversation about stablecoins. What topics right now, from your perspective, do we kind of need to hash out, even within the industry and even kind of branching out? What are kind of some of these more sometimes divisive topics that you think more conversations need to be had around?
Yeah, one of the biggest anxieties in at least the central banking space, maybe not so much the regulator space, is the degree to which stablecoins compete with commercial bank deposits. This is a very big, this is a reasonable anxiety to have, because if commercial bank deposits withdraw, then credit activity contracts, and that's generally worse for the economy. But we would take the view that you can build a perfectly functional credit ecosystem with stablecoins. It just happens to be one where the balance sheet is disintermediated and you have that activity taking place elsewhere and more driven by the interaction between the lender and the borrower, rather than having a central party, a bank, writing mortgages. So we're much less, anxious about this. Certainly we haven't seen, empirically, we haven't seen any meaningful flight of balance sheets from banks to stablecoins. A lot of it does seem to just be net new or marginal at the net when you pull out the outflows from the inflows into the banking system. So there does not seem to be an actual outflow today. But if our theory is correct and stablecoins are a better way of using money, we should eventually expect some outflows or migration from deposits to stablecoins. I think the most interesting possible world is one where you have sort of both. This is where tokenized bank deposits might come into play, where the tokenized bank deposit is still a bank deposit, but it's at least on the same settlement layer as a stablecoin, and the two can interact more fluidly with each other. And I feel like this would be a positive evolution that would keep sort of both ecosystems interplaying with each other, a bit more dynamically and with a bit less risk.
We have to transition, but I do have one last question. I'm sorry, Drew, I can't help it. Is this?
No, I'm done. I already used my last question coupon.
This is mine. Is this where Grove starts to fit in? Because I'm kind of been reading it and trying to figure out where this fits into the conversation. I mean, Grove saying it's a new star, the Sky ecosystem focuses on building institutional grade credit protocol designed to facilitate credit creation, seamlessly move yield in and out of the on-chain economy. Is this one form factor that you're thinking through for, what you were just talking about with stablecoins for bank deposits?
Yes, definitely. Grove is one of the most interesting experiments in DeFi that I think more people should be talking about. It's a star in the Sky universe, which means it has the ability to borrow from the Sky balance sheet. This is interesting because the Sky balance sheet is another stablecoin in its own right. So people hold and use USDS and they save with it, they transact with it, what have you. And Grove has the ability to borrow up to a limit from the balance sheet in order to allocate it for a spread. And it can not just allocate those assets into like credit investments, which is one way of spurring the development of credit, but it can also build products like Grove Basin that plug into the rest of DeFi in order to turbocharge its growth and to make them, sort of capitalize on the growth that it enables. Grove Basin is a redemption facility for tokenized money market funds. We were talking earlier about how liquid DeFi is and, over-collateralized Bitcoin loans. Today in DeFi, over-collateralized Bitcoin loans are the de facto risk-free asset. They are not without being risk-free. They are the de facto proxy for a risk-free asset because they are the most liquid instrument on chain. And this is with BlackRock having a money market fund on chain. And the reason is the liquidity. The reason we don't have a stable SOFR rate on chain is because it's very difficult to move from fiat to on chain. And what Grove Basin does is provide a settlement financing facility for tokenized asset issuers that will make subscription and redemption for money market funds instantaneous, in line with DeFi. And we think this is a game changer more in the sort of market structure level, because you will finally be able to do rate arbitrage with money market funds within 12-second increments. These are like today, if you look at the quote unquote risk-free rate, it's very noisy around SOFR. We expect this to completely flatten and stabilize. And this is a precondition in our view for creating a healthy repo and financial ecosystem on chain. Yeah.
This is probably the worst question to end our interview with, because now I'm like fighting the urge to go
We're
deeper.
Opening so many interesting cans right now. We will not be able to see.
This is a call. We met with David from Lotus Protocol and we kind of talked about, and I started ideating on like a masterclass session to really dive deep into the workings of these products. So maybe this will be one of our, we can pilot this with you. It would be great to really more whiteboard and really dive deep into this ecosystem and how it works and what it changes.
Sure. I can talk for hours about stablecoins for anybody who can tolerate that. Yeah.
Oh, well, you found a place on the internet where you're more than welcome. So we'd love to have you back, continue learning from you. And yeah, there's so much here, as you know. I mean, we didn't even touch on your background at Goldman and kind of the hops in the journey. So we'll have to have you back and continue to uncover some of the thinking behind how you're building Steakhouse, how it goes to market, and would love to keep thinking through ways to support you guys. It's really interesting what you're doing. So
appreciate that. Yeah, anytime. Yeah, it's a pleasure meeting you guys.
Cool. Thanks, Adrian.
We'll have you back soon. Thanks, Adrian.
Ciao.